So it appears that perhaps you're even moving the market. What makes you so confident that perhaps all of the risk here is priced into Apple shares?
Yes, good afternoon. Thanks for having me. I think the important thing here is to look at what really China can do. And there are two ways in which China can retaliate. The first is a direct way in which they could ban iPhones. We think the likelihood of that is quite low. But the second, which is actually more measurable, is really to look at the data. And we looked at multiple different sources of data to get some confidence around what is actually happening on the ground in China. We do a very extensive survey, and the survey results actually show that the purchase intentions of Apple iPhones for Chinese consumers and globally, as a matter of fact, are not very different, did not change much through this whole trade dilemma that we're going through. Secondly, when we look at what is actually happening to iPhone sales in China, we're looking at the inventory is getting continued to draw down, which is a big deal because as inventory trends continue to improve, which they should seasonally at this time of the year, we should start to see a pickup in the back half of the year. And lastly, when we think about what the App Store, which is quite an important thing for Chinese games, the trajectory of that has actually significantly improved from just up low single digits in January and February to up over 20% in the months of March, April, and so far in the first half of May. So we think that the trajectory that the data is actually telling us is much better than what people are worried about, and that's the worries are being reflected in the stock, but the data is telling us a different story.
Okay, so you make a good case there, but I want to go back to that idea of a Chinese retaliation on Apple. You say it's low because Apple employs indirectly many Chinese people there, and the iPhone is made there. Having said all that, is Apple doing enough to shift some of its supply chain away from China, just to hedge itself and make sure that it's getting its supply chain sourced through other places?
Yeah, no, absolutely. It's a great point. Look, I think that there are a couple of different issues at stake over here. First is, how Apple is tied in. Apple is one of those unique companies which has tremendous amounts of influence, not just domestically, but also in China, across, when you look at both the country level, regional level, and city level. So they are very, very involved, and they're very aware and working very closely with the domestic authorities in both places to try to leverage, the best outcome for Apple. Now, secondarily, what we think is that on the topic of actually moving any production out of China, we've actually written about this quite extensively. We call it Get America Manufacturing Again, GAMA, and we think that there is a way for Apple to change the design of its products, increase automation in the assembly process, such that over a longer period of time, you could actually see production move to other regions, particularly to the US if you bring in a lot of automation. In the interim, Apple is actually moving some of its iPhone production starting up in India as well.
So I want to talk about some of the other calls that we've seen out of other Wall Street firms, Wamsi. For example, Goldman Sachs saying that Apple's earnings would take a 29% hit if China were to retaliate by banning iPhone sales in the nation. Do you agree with that assessment? I know that you're saying that seems less likely, but is that the potential magnitude of a hit that Apple could take?
So we disaggregate the hit from two perspectives. First is if there are tariffs, and we've quantified that about $1 in earnings on a $14 base, so that's not quite as high as what you quoted out there. Secondarily, if they're completely banned in China, look, Apple sells about 35 million iPhones currently in China. They make about 4 cents per million iPhones, so we can do the math there, and I don't think it comes to such a large number. But at the same time, we have to be aware that what is the risk of actually doing something like that? I think that's a fairly dramatic step to say 35 million iPhones will not be sold. What we think is that there'll be somewhat about 180-ish million iPhones that will be sold this year globally, and China could be down 20%. That would still mean only 6 million iPhones. So the magnitude of truly a demand destructive, something that's demand destructive in the interim could only be a temporary hiccup in the overall story. We don't think of this as something structural, something that sustains itself for the long run.
Okay, I hear what you're saying. However, we don't know what's going to happen. You've got two pretty temperamental leaders there who could get caught up in the emotion of the moment. What can Apple do when it comes to its cash and its return of cash to shareholders? It's already got a buyback program in place. It's increased it by $75 billion, also raised a quarterly dividend. Do you expect Apple to make any meaningful changes to that cash use?
Yeah, no, it's a great question. I think that Apple has been very, very disciplined in its approach in capital return. They've actually been good buyers of the stock. If you look back at last quarter, they waited in the month of December when the market was extremely choppy. They were quite opportunistic. When the stock actually dipped in early January after their pre-announcement, they used the timing of that to buy back a tremendous amount of stock. So we think they're good stewards of capital. We think that they do a good job in buying back the stock and timing it appropriately. Now, at the same time, they look at the long run and they see all the future innovation that is coming to bear, and they look at the stock and think that it's a great return. So the $75 billion that you noted, it is a tremendous amount. It does provide downside support for the stock. And we think that ultimately, is it better spent on content maybe, or is it better spent on M&A? Well, you have to look at the return. And currently, Apple is still building out its content portfolio. So while they could easily put $20 billion, a year towards content to match the likes of Disney or Netflix, I don't think that it's quite as prudent at this moment when they're still building out that capability. Longer term, I think there'll be tremendous amounts of investment in services.